Hello, everybody, and thank you for joining me today. We've got another in our series of interviews with executives from mining companies. Today, we have Rob McEwen from McEwen Mining. For investors out there, I think that they have a compelling opportunity for two key reasons. One is that they are in the midst of a turnaround in their mining operations for gold, but they have a hidden gem of a copper asset. That's the main focus of our conversation today. And we're going to get into why that copper asset is so compelling. Rob, thank you very much for joining us today.
Pleasure to be with you. Thank you.
So some of the key points that I wanted to make on this copper asset is that it's a significant deposit, and it is trading at a tremendous discount. Well, not trading, but the opportunity is being priced at like 0.006 cents per pound of copper. That gives it a potential for a multi-bagger. You have an experienced team of copper designers, builders, and operators, and you've personally invested $40 million of your money into it. That is a crucially important point for me, and one that I always look for, Rob, because when I was a youngster, my best friend was a guy named Tom Ritchie, and his dad was Dave Ritchie, who founded and built Ritchie Brothers Auctioneers. And so my young business education came from playing cribbage with Dave Ritchie. And for 20 bucks a game, we used to play. And it was probably the cheapest education I ever got, and probably the most powerful. And one time I was very interested in the stock market at a young age. And I asked Dave, why don't you put some of your money into the stock market? And he said, well, Allan, I'm confident I can grow my money better than most out there. And that's why he put a lot of his own money into his own company. And so it's a key thing I look for. So why don't you touch on some of those subjects, Rob?
Okay. Well, let's deal with the copper, because you bill it as the biggest. In geological terms, it's described as a giant in terms of its the size of the resource that's estimated to be there. I've really looked forward to seeing the development of this project. But copper ran down to $2 a couple of years ago. McEwen Mining had some operational challenges that you said were turning around. And so our treasury was low and we couldn't advance the project. I saw it's in a subsidiary of ours right now. But the sub owns all the asset, and we're looking to advance the project from a PEA, a preliminary economic assessment, to a pre-feasibility study. And if you think of mining properties similar to real estate, you get a raw piece of land and you get it rezoned from, say, agricultural to commercial, and there's a value bump. And then you go from there, you put some economics in, which is called a preliminary economic assessment in mining. Once you do that, there's another bump. And then you move to a pre-feasibility study, and there's another bump. And then you get your permits, there's another bump. So when I looked at the transactions that had happened between 2010 and 2010 to 18, there were 12 large copper projects sold, and they were at various states of development. There were only 2 of those at the pre-feasibility stage, and they sold for 13 and 15 cents a pound. And as you just said a moment ago, we're valued right now at 0.6 of a cent. So we're thinking, as we advance the project and we
And by
looking.
the way, Rob, when we last talked, you mentioned that the bulk of those were done at the PEA level between 3 and 5 cents.
Well, I was just saying, no, they were 13 to 15, the only two of them, but I've
That's
used,
at the fees stage.
yeah. And I looked at it and said, well, if we were able to advance the project just to 3 or 5 cents, we'd take a value from 175 million to just shy of $1 billion, 980 million. At 3 cents and at 5 cents it'd be worth 1.6 billion. Now, I decided, okay, we got to get this started. It's located in Argentina. Argentina is suddenly becoming a more attractive place for foreign investment because next door to them in Chile and Peru, their politics have gone far left and talking about higher taxes, nationalization, and all of a sudden, they're big companies looking at Argentina. Fortescue's just committed $8 billion. There's a huge lithium industry developing there. And the state we're in is, the province rather, is pro-mining. And there are a number of mines in there already operating.
Actually, for my listeners, one of the companies that I picked years ago in Argentina was a fabulous success. Extore was in the San Juan with a gold and silver epithermal vein system. So I have a little bit of experience there, and it was a very good one.
Yeah, well, that's good. So, so Argentina is looking much more attractive geopolitically. And when you look at Chile and Peru, they produce 27% of the annual production of copper globally. So all of a sudden, and the reason Argentina hasn't had a lot of mining investments wasn't because of a lack of geology. It was more their politics, which has now changed. Barrick's operating in there, Fortescue's in there, Lundin Mining. So there are a number of players in there. So, and their seasons are the reverse of ours. So the time to get into the property is now. That's their summer. And we're, one of the issues about our property was we never tried to access it in the winter because you have to go over 2 high mountain passes and there's switchbacks all the way up to the pass and all the way down. And it would not, because of the snow and the ice, it wouldn't be a good road to travel on. It'd be, I think, a dangerous road to travel. So we mapped out a new route, which is being constructed right now.
Before you get into that, Rob, I think the point you make about Argentina is really important. I heard Pierre Lassonde say one time, you know, a project that today looks like it could be in a jurisdiction that is challenging, you know, those jurisdictions have a way of changing. And you can often find tremendous opportunities. And I think Argentina is going through one of those kind of transitions now, and it has great geology.
Yes.
So
yes.
Now we'll get back
Definitely.
into your access of getting at your Las Azulas.
So our current access is 5 months of the year. This new road we're building will give us 12-month access, lower altitude. It'd be an ideal corridor to bring power into the project. So I said, let's get this started. And in the summer, I wrote a $40 million check. When you look at my total investment in McEwen and McEwen Copper, it's over 200 million.
You're high on the Dave Ritchie indicator.
So looking at this, I looked at it as a benefit to McEwen Mining and to McEwen Copper when we take it public. So that's why I was willing to put so much money into the copper, because I think that's, it far outstrips our other operations in terms of size.
And longevity.
Yeah, and longevity and profitability. So in the PEA, or the preliminary economic assessment that was done,
Rob, before we get into that, so when that gets spun out, the shareholders of McEwen Mining, MUX, will own a big chunk of McEwen Copper.
Yes, 68% of it,
Okay.
69%. So there's a benefit if someone, I mean, right now the financing we're doing is a private placement, minimum 250,000, and then we'll go public. But that's and we decided to try the public route because there was a lot of work to be done by changing the access and with the new road, and by doing much more drilling and updating our preliminary economic assessment. We thought we'd be presenting a better picture and get more value for the shareholders of McEwen Mining.
Well, and then getting back to the investment opportunity, right now, McEwen Mining is trading right near its 52-week low.
Yes,
So it's not giving you much credit for the potential to turn the company's gold mining operations around, and practically nothing for the copper. Meanwhile, we've got this electronic vehicle revolution happening. And, even before the electronic revolution was happening, I remember hearing, just to power up the emerging economies, there was a report out that we needed to find an escondida practically every year, starting about 15 years ago. And that certainly hasn't happened. And now you add on the electric vehicle revolution. So for investors in McEwen Mining, you get a kick at both the gold side of the story turnaround and the copper, and you get it at a 52-week low.
That's well said. We had, in looking at the market, it seems we had our operations, our gold and silver operations, and then we had this copper, but the copper is a really large project, and it's going to require a significant amount of money to advance it to production. And we felt the market seems to prefer pure plays, a precious metal company or a copper company, but not a combination. And so that's why we're looking to push to do an IPO in this new company.
But in reality, Rob, that's what it sounds like, a big price tag for a smaller company. But 30-year plus mine lives and those kind of price tags are what the majors are looking for.
Oh, absolutely. We brought in a firm from Australia called Whittle Consulting, and their business is optimizing mine plans. So they've gone in and looked at our preliminary economic assessment, done their analysis, and after about 3 months of simulations and all sorts of analysis, their conclusion is there's more room in this deposit. But in the PEA, which was done at
more room to enhance the economics,
to expand the size of it, and to improve the economics significantly. So in the PEA, probably remember, Allan, it's 36-year life, producing 415 million pounds of copper a year at $1.14 a pound with gold and silver credits. This is a deposit with it's indicated 1/3 of the resources and 2/3 are inferred. But if you added those two together, it's 29.5 billion pounds of copper, 5.5 million ounces gold, 191 million ounces silver. I have to say that the gold and the silver are low grade, so you'd only get about half of that. But if you were to convert those numbers into a copper equivalent or a gold equivalent today, so convert the copper at current prices and the silver, you'd be over 80 million ounces of gold.
Wow.
So it's a big, big deposit. And in the PEA, preliminary economic assessment, it looked at producing this 417 million pounds of copper at $1.14 a pound. Copper is now just shy of $4.50 a pound.
Right.
So there's a lot of power in this deposit.
Well, to put that into context, one thing that blew me away was your sensitivity to the price of copper. And at current prices, you're looking at an internal rate of return of 33.6%. Now, I'm very bullish on copper because of the electric vehicle revolution. I think we're going to see over $5 a pound of copper, and for a sustainable period. So whether you take $3 a pound copper or, jump it up there, you're looking at anywhere from 20 to 35-ish% internal rate of return. That's looking pretty darn good in the mining sector, no matter what metal you're looking at.
Yes, well, Goldman Sachs called copper the new oil. Just
I like to call it
transportation.
I like to call it green gold, like Friedland calls it.
Well, he's got a big project too in Africa.
Right, right. And when it comes down to it, Rob, just to meet the needs of the powering up the industrializing countries, then looking after the electric vehicles, and something that I don't think a lot of people recognize is, in order to power up those electric vehicles, the industrialized countries of the world are working with aging power grids. So yes, those need to be upgraded as well. So that old analysis of needing an Escondida every year for decades, becomes an even more bullish argument. And that's why I think copper is headed a lot higher.
Yes. Well, when you consider, again, just the political ramifications in Peru and Chile, and they provide 27% of the global annual supply of copper, any disruption there is just going to be a strong push on the price.
And there's not enough exploration. There's not enough companies in the pipeline of development, economic assessing, moving towards production. So you look at the supply side of the story with the potential for disruptions in major markets. And, the argument for copper keeps getting better and better and better.
Well, some people looking at liquidity, I mentioned 3 and 5 cents. If that was the value after the PFS, the preliminary feasibility study, that would translate into, in terms of the holdings that McEwen have, a 2.5 to 3x, and in McEwen Copper, 4 to 6x over the value it is right now.
And that's looking at it around current prices. If things get more bullish, like I think they're going to get, you start getting 5 cents plus.
Yes. Well, we can all think of these big numbers, but it certainly, by improving the access to 12 months and moving to the drilling we're going to be doing is 53,000 meters, or about 171,000 feet. All of our drill holes are vertical right now. And as I said, 1/3 is indicated and 2/3 inferred. And the drilling is to bring everything up to an indicated level and to drill to define the first place we'll start mining. The grades, I'll just get something. Excuse me for one moment.
Not a problem. So while Rob's getting that, I can't believe how cheaply valued this is relative to the assets the company has. Go ahead, Rob.
So the average grade of all the resources is about 0.44% copper. But in the first 13 years, we're looking to mine 0.7% copper. Now, I think there was about 158 holes drilled, and 25 of them were still in mineralization when we stopped drilling. So, and some of those grades, you probably won't be able to read this, but there's a little sample of core in here that runs 5% copper.
So it's more enriched as you get deeper.
In parts of it, not all over. So
Okay.
we'll be drilling on some of those, but, and we talked about it before the interview started. I'll send you some of the historic grades that made me really interested in this. I mean, this is sort of cherished, 5% copper as opposed to like that's 10 times what we're looking at in grade. And so,
Well, after you pay off all your CapEx and make a bunch of money, you can get into a copper jewelry box down there.
well, you know, it's always exciting. And this is a porphyry copper deposit, and they tend to occur in clusters. They're not a single event. At least that's quite prevalent through the Andes where we are.
Right. So there's even potential for more than 30 years of mine life. And let's face it, Rob, that's what the majors are looking for. They want to pump a bunch of money in and make a bunch of money for decades.
Yes, yes.
And so, you know, as you de-risk this, you put the price tag of what any major would want to get in at much higher along the way.
We have had a number of offers from majors. And I think they looked at our balance sheet at the time, McEwen Mining, and some of our operational issues and said, well, let's just put some money in front of them and see if they snap at it. And I thought, no, let's move ahead and improve the value first before we start any serious discussion.
You know, that gets back to your history in the business a little bit, Rob, because I think, you know, with Gold Corp, you recognized value long before everybody else did. And, you know, you built on that value and built a company that was at one time one of the lowest cost producers of gold on the planet. So, you know, that's one of your skills, not only as running a company, but as an investor in the sector. You've been very successful at finding value before the market does, so to speak.
Well, it's a segment that's been ignored largely by investors. It hasn't delivered a lot recently. And when you compare it to the tech, the biotech, and I mean, that's where a lot of the attention went into the market. I've always felt that you want to look at areas where the herd hasn't gone. And are they ignoring something that they shouldn't be? Because you're getting, there are a number of companies out there. I mean, there've been some great runs in the mining space in the last 16 months.
Yeah.
I mean, some of their exploration plays largely, but you know, you think of Great Bear, Newfound Gold, and Amex, and you can go on and on.
I think Amex and High Gold are going to
as well.
Yeah, they've got some special projects and they've had good runs, but they're still very cheap.
Yes, yeah. I mean, Great Bear, I looked at it at 70 cents, said I'll buy some. But management, I said, well, I'll give you $6 million. And they said, yeah, but we'll have to do a little above market. And then I said, was that all you need? And they said, yes. And then they came back and said, well, we'll sell you some stock, but all our directors want to buy stock now that you're buying. And that was at $1.50 and it was taken out at $29 just recently.
Yeah, it's in the process. But that high, you know, the High Gold blows me away with some of the grades and the resource that they have. And, you know, a lot of these companies are not getting valued, and your company as well. You know, I don't know how you're doing for time, Rob, but I think we've made a compelling story for the copper operation. And by the way, before we get into that, I wanted to also add about getting ahead of the herd. The herd is definitely going towards electronic vehicles. but the herd hasn't even realized yet to have those electronic vehicles, you need copper.
Yes.
You know,
Yes.
right now you've got a tremendous copper opportunity that could be one of the top 20 producers in the world if it was in production, and it's trading for a fraction of a penny on the copper that's in the ground. So there's the herd hasn't even realized yet, okay, we're going to build all these electric vehicles. We're going to certainly need a lot of copper. But before we move on, before I let you go, I'd be remiss not to talk about your turnaround potential on your gold operations, because as compelling as the argument is for copper, you look at what's happening with the monetary system right now. Debt's going through the roof, money printing's through the roof, inflation's through the roof, and they can't do anything about it. The Fed's painted into a corner that they can't fight inflation. So let's talk about your copper operations, because I don't think you're getting much credit for the turnaround efforts you're making on the gold side, let alone the hidden gem of your copper opportunity.
Well, like you, I think we have a lot of valuable assets. We're in Timmins, which is a well-known mining camp in Canada, and down in Nevada. We're large real estate below Nevada Gold, formerly Barracks, Cortez Hills. So we had some operating problems, as you know, in 2019, some of our own manufacture, some Mother Nature doing things to us. We've been able to, since the second quarter, deliver on guidance. And so I felt we'd lost the goodwill of the market and by missing, but we've now strung together 3 quarters where we've increased production and lowered our cost, and the operations are stabilized and growing. We'll have another preliminary economic assessment for our Timmins operations, where it'll be out before the end of the month. But in effect, we're looking at increasing our production there, more than doubling it, and bringing down our costs and extending the life considerably. It still has quite a bit of exploration potential there. Our gold bar project in Nevada, in the Cortez Trend, is producing more than forecast, and costs are there again coming down. Not where I want them, but we're still on the path to bring them down. And both are in very nice situations. In San Juan, in province, or Santa Cruz province in Argentina, which is southern Argentina, we have a 49% interest in a high-grade gold silver deposit called San Jose. And they're out exploring. It's right next door to Newmont's Cerro Negro mine that Newmont picked up when they bought Gold Corp. And Gold Corp paid $3.4 billion for the property. They wrote a bit of it off afterwards, but it's still quite a large mine that would make a nice add-on for Newmont one day, since they're down there.
Oh, there's some value there. You hit on a couple things that investors that are looking at a turnaround story in the mining, well, looking at any kind of gold mining company or any mining company, bringing down the costs, growing the production profile, that's what you want. I mean, you've got a lot of experience in that. Gold Corp, as I said earlier, was at one time one of the lowest cost producers of gold on the planet. So you're obviously well aware of the importance of getting those costs down and making money at these operations. But you've also have been doing some drilling in the Timmins area. And that's a way to grow the resources. Highlight a little bit about that, because there was some good numbers in there.
There are some good numbers. It's in what's called a greenstone belt. And historically, those have deep roots. And our mines, we have two properties. One is the Fox property, includes the Black Fox mine and a couple and another. They seem to like naming them after foxes. I want to change it to a wolf, but there's a little bit of historical resistance. And that goes down to about 800 meters. And the Stock property, which goes down to just over 300 meters. In both situations, we've encountered high-grade gold as high as 55 grams down at 1,000 meters at Black Fox, and 27 grams down 600 meters below at Stock. A lot of our activity this past year has been drilling around the Stock mine because we have resources. This old mine, to the west of it, we've developed a resource, and you've got some great grades coming out of there, and good intercepts. And to the east, you have a lower grade, but a fairly large resource sitting there and directly under the mine. So you have the benefit of a mill right beside the where we're developing, and that we'll probably develop it first. I'm getting you confused because we have these properties. We have a number of properties in Timmins, and that is where we brought them all together, put them on a timeline when we could bring those into production. And that's what's going to be discussed in the PEA that we're going to be releasing later this month.
And you know, you brought up some important points there, and I'm going to do a bit of history again. The Red Lake mine was in the Greenstone belt. What causes this plumbing is deep cracks in the earth that go way down. And what you brought up the point about the depth that you're at the Red Lake mine, you guys were down more than 1,000 meters, and you started finding all the jewelry boxes that made Gold Corp one of the lowest cost producers. So it's fair to say that all that depth potential and the potential for more jewelry boxes is wide open.
Exactly. That was one of the attractions when I bought this property. It had Premier Mine had bought it. They'd sunk in just over 500 million. We paid under 35 million for it. And they had problems elsewhere, and so they weren't getting what they wanted. The Black Fox mine has some really high grade intercepts, but short. And you needed a lot of work to get at it. And they didn't have a very long mine life. But those high grades caught my eye. And then we're mining a satellite deposit next to it, which we call Froome.
Did they remind you of the Red Lake mine? Is that what caught your attention, Rob?
Yes. Well, I like high grade, you know. You get used to it. So looking at it, I thought, well, they hadn't explored to depth, and they hadn't committed a lot of money to exploration. And to me, those were the two things we needed to go explore, and not only at depth, but laterally, because it's a large property package. It's coming along. It's a little slower than I wanted, but it's coming.
So, Rob, it sounds like most of your drilling is around the operations.
Well, a lot of it is there. A year ago, we were drilling on the Fox property, which there's about a million ounces to find there right now in 6 zones. And it's about 4 miles away from the mine site. And then we went concurrently over to Stock, where we found something in 2019 and been building that up. And we're looking at either dewatering the old shaft or sinking a ramp, and because it's maybe 1,200 feet away from the
I guess the better way to me, I should have said it, is you've sort of been focused on the first 600 to 800 meters.
Yeah.
Is there any plans to go shooting some deeper holes looking for those deep jewelry boxes like at the Red Lake mine? Just to add some pizzazz.
Pizzazz is good. No, definitely. We're looking at that as well. There's two structures that are carrying the mineralization in the old mine and this area to the west. And right now we're testing the hypothesis that they converge. So that's still in the wings. It's hypothetical right now, but we're getting encouraging results that suggest that might be the case. And often where those structures come together, you get blowouts and grade.
That's what I was going to say, because you get the concentration of the whole system and it tends to concentrate the extreme high grade.
Yeah. The Fox complex, as we call it, has gone through a number of owners, and people have looked at it and said, well, I'm not sure it's not a money pit. And that was very similar to my experience at Red Lake. When I went in there, it had a short life, it was high cost, had difficult labor relations. Most people thought it was close to the end of its life. And I looked next door and there was this Placer Dome owned this very rich mine. And there was a common history. And in fact, it's rather humorous. There was a fellow by the name of Arthur White, and in the late 40s, he owned both the Campbell property and what was then called Dickinson property. And he didn't have enough money to develop both of them. So he took a coin out of his pocket, flipped it, and said, all right, heads, I'm selling the Campbell mine. So when I went in there, the Campbell mine had produced 9 million ounces, and the mine I bought had only produced 3. But I looked at it and said, all right, there's a difference of 6 million ounces, and it's the same ore body. So we should be exploring this. And after committing 10 million to exploration, we found, as you said, 1,000 meters down, a treasure trove.
And it just got richer and richer and richer. And that's, as you're describing these two structures that potentially come together, you're pointing towards a similar kind of potential. It's in the same kind of rock, and that's what you look for in these kind of systems.
Well, you can look at the Dome mines, the Red Lake mine of Gold Corp's, Kirkland Lake. They're all in the same structure, and they're at least, they're at least 2 times deeper. And that's what got me looking at this and saying, we should be drilling.
You mean strike to depth?
Oh, well, just depth. The depth, their deposits go down almost twice the distance of the Fox mine and 3 or 4 times the distance of the Stock mine, which are 2 properties up there.
So that's why I'm asking you if you're going to take some stabs at that. I guess you would probably follow those 2 structures and just keep seeing where it leads you.
Yes. At Black Fox, we drilled some deep holes from surface, and we had difficulty getting through a part of the ground. It was broken up and we were losing drill core. So we said, well, all right, let's go underground and try it rather than from surface. So but right now we're going to mine the Froome deposit, and it's shallower, wider widths, more consistent grade. And that's a bridge before we start up the Stock mine and then go over to Grey Fox. And as I say, it's going to become a wolf, I think.
So, earlier I said that, you're not getting valued for your turnaround on your current mines, not getting valued for your potential with your copper gem. And then nobody's really even looking at this as what can happen with the drill core, with the drill truth machine, going deeper and looking for jewelry boxes in a similar kind of setting as what you found in your past career.
Yes, yes. Well, we gave the market a lot of reason to ignore us for a while with our operating issues, but and it's going to take time. You have to. Said we have to link a number of good quarters together before people start going on a broad scale saying, "I want in." As you're pointing out, and I believe we're early in this turnaround, and there's more to come.
But that's the nature of a turnaround play, Rob. I remember at one time, Apple Computer was trading at $12 a share, and they had $10 a share in cash.
Yes.
And fortunately, my mom bought a little bit of the stock after listening to me. But that's the nature of turnarounds in any sector.
Yes.
You get punished because of what has happened. And it takes a while for them to realize, well, this company has a lot more assets than what they're being valued for. And that's what makes for a great turnaround investment.
Absolutely. I agree.
Awesome. Okay, Rob, I know you're a busy guy and you've been very kind with your time. Did you have anything you wanted to close with before I close off and make my final argument?
You've covered all the bases. Thank you.
Okay, well, let me close it off and we can have a quick chat at the end there, Rob.
Please.
So there you go, folks. Gold, I think, is going a lot higher. You've got inflation going through the roof, debt, money printing, debt issuance. The Fed can't fight inflation, neither can. This is not just a US-centric argument. It's a worldwide argument. This is a very compelling argument for gold. Then at McEwen Mining, you've got a turnaround story on their gold operations. Plus, they've got wide open potential with the Truth Machine and drilling. It has all the lookalikes of these other greenstone belts, like at Red Lake, where Rob built one of the lowest cost producers of gold on the planet. I think he can do it again. But then you've got this copper story that's just being priced like it's nothing in a background of the electric vehicle revolution, the need to upgrade the power grids to power those electronic vehicles. Plus, you've got all these developing economies that need copper. The industrialized countries need copper. The developing countries need copper. Everybody's moving to this electronic revolution, and it doesn't happen without copper. And there's just not enough new copper projects in the development stage and exploration side. And McEwen Mining offers that as well. And it's trading at a 52-week low right now. My shows are for information purposes only. And it's important to speak with your financial advisors and do your homework. And I invite you to do your homework on McEwen Mining, because I think that they are being priced for failure, not priced for success. And they have compelling assets that have them in the position to be a big success in the future. So do your homework on McEwen Mining. I'm going to keep talking to Rob in the future as they execute on these various subjects I talked about. But at a 52-week low, that's when you want to be looking at something like McEwen Mining. So do your homework. We'll talk to you soon.